Thanks for clicking. The London and St. Thomas Association of Realtors, LSTAR, released London's real estate data for the month of December late last week, showing a continual drop in prices across the board. The release comes as we received news last week that stronger than expected employment numbers, much stronger employment numbers, have increased the likelihood that we're going to be seeing even more interest rates coming down the pike in 2023. The continual increase in interest rates will no doubt put even more downward pressure on London's real estate prices, which, as we'll see, have seen their average price drop over $230,000 since its peak last February. So what I want to do today is go over London's real estate data for the month of December, take a look at these job numbers and discuss why they are a big problem for Bank of Canada Governor Tiff Macklem, and then discuss some implications for London's real estate market going into 2023. We're set to receive Canada's inflation numbers late next week, which will obviously have a big impact on the Bank of Canada's rate decision coming at the end of the month. We'll obviously have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these numbers. On to the numbers. First up, the benchmark price. The benchmark price, if you'll remember, that's the price that represents the home with the most popular set of features. The benchmark price in November was $575,500, and that dropped down to $566,600 in December. So that's about a $9,000 drop in 1 month, but it's also a $185,000 drop since the peak of our benchmark price back in February. The average price of a home in December fell even further than the benchmark. The average price in November was $611,000, and in December that fell down to $591,500. So that's a $20,000 drop in our average price in 1 month, and that's a $232,000 drop in London's average house price since nearly a year ago when we hit our peak in February of $823,000. The median price also fell. The median price, that's where half as many homes were sold over that price and half were sold under that price. The median price in November was $577,500. And that fell about $16,000 down to $561,500. So about another $16,000 drop between November and December. The sales to list price ratio, the SLPR, also fell, although very, very minorly. The SLPR, if you'll remember, measures by how much homes are selling over or under asking price. So if a home is listed for $100,000 and sells for $90,000, the SLPR is 90. The SLPR in London in November was 96.5, and that shrunk very, very minorly to 96.4. So homes are selling for about 0.1% less under asking than they did in November. With that said, this is a major change from this point in time last year. In February, homes were selling for about 25% over asking price. And these price changes are well explained when we look at the months of inventory, the MOI. The months of inventory, that's where if no more homes came to market, if no one else put their homes up for sale, how long would it take for us to have no more homes left? The MOI in November was 2.8, and that shot up in December to 3.3. So as of right now, if no more homes come onto the market, it would take 3.3 months before we ran out of inventory. And finally, the median days on market was up as well. The median days on market, that's where half as many homes take longer than that number to sell and half as many homes sell sooner. The median days on market in November was 23, and in December, homes took a bit longer to sell. That number was up to 28. So in London, half the homes that come to market take 28 days or longer to sell, and half take a shorter amount of time. So in London, prices are down all across the board. The benchmark price is down $9,000, the average price down about $20,000, the median price down about $16,000. We have about 0.5 months more of inventory available than we had in November, and homes are sitting on the market for about 5 days longer. All in all, not great for home sellers, but there's definitely some opportunities for home buyers out there. But as we're going to see, interest rates are likely to continue to go up. As mentioned, despite expert predictions that we were going to be seeing a major slowdown in job numbers in December, it was announced last week that in fact Canada added 104,000 jobs in last month alone. The job numbers sent the value of the loonie higher, as investors now expect, probably quite rightly, that the Bank of Canada is going to be raising rates at its announcement in January. When Canada's unemployment rate is low, wages go up. Workers have bargaining power, which, as we've talked about many times on this channel, the Bank of Canada really wants to avoid. And an increase in job numbers, an increase in the amount of people employed, is exactly the opposite of what the bank is looking for. So those job numbers in December is more than likely to send the Bank of Canada to raise interest rates by at least 25 basis points by the end of the month, if not 50. We'll see what the inflation data looks like. And as we've seen, with a $230,000 drop in the average price of a home in London, due in large part, if not entirely, to interest rate hikes, These further hikes will only put even more downward pressure on the value of London's real estate market. And it's a strange time right now in the London real estate market. Not only for the past 2 years, but I would say for at least the past 6 years, we're seeing for sale signs sit there for a long time. Homes just aren't selling as fast as they used to, and that is the major reason for the price drops, and it doesn't look like this is going to be getting any better anytime soon. With that said, though, London's market going forward is going to be very much interest rate dependent, which is very much dependent on the inflation rate, which is coming out next week. We'll obviously have an update out on that inflation rate on this channel. Click like and subscribe if you want to get those updates, and thanks so much for watching.